Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Hey traders, Stacey Burke from Stacey Burke Trading, and before we get started, I want to remind everybody, if you're new, if you have not been through this material in depth, that this playlist, not everything you need is in this playlist, includes every video, the most recent videos that talk about the levels, the setups, the day count, timings, behavior of price, the templates, the weekly templates, pump and dump and pump, and session trades. Today we're going to try and break things down even more. There's a lot of questions about 3-day setups, and we're going to reinforce repetition is the mother of all learning. And again, if you've just recently watched a video or you've saw some material and you're asking a lot of questions, I reinforce that everything is in this playlist that you need to know. So go back, you need to do your homework, a lot of the same questions repeating. So again, simplifying things, breaking it down. We're going to go over high of day, low of day levels and how they are formed by peak formations, when to understand when you don't have a peak formation, when to understand how you can have a 3-day setup in any combination of 3 days, which is different from a Monday, Wednesday 3-day template and a Wednesday, Friday 3-day template. We talk about this in the playbook. Now in the playbook, we talk about basic model for trade entries and 3-day setups. These are parabolic trades. So I want to emphasize the difference between getting into a move that goes in a direction and understanding when you have a parabolic opportunity, whether that's just for a session trade or a 3-session setup. Essentially, these are both the same. We will have peak formation, consolidation, whether that's over 3 days, 4 days, if you have an inside day, or a Monday, Tuesday, Wednesday setup heading into Thursday, whatever that may be. It can be an Asia, London, New York, or it could be a New York, Asia, London, New York, because one of those ranges is inside of that 3-session peak formation. Day 3 longs. This is an example of where we will see peak formations on one side continuously broken, or maybe not even a peak formation, a market that continues to move higher or lower because there is no peak formation high or low in place yet. First red day, first green day, how they form in an ideal template, how they can form in an ideal template, and the inside day, understanding that an inside day is a signal day. These are signal days. Day 3 longs in the market. We can get a signal day. If day 2 longs are in the market and we're heading into a day 3, guess what? Day 3 longs in the market because day 2 is a signal day. So understanding when these opportunities present and then how these can set up for parabolic trades, whether that's 3-session or 3-day. Parabolic short squeezes, low-hanging fruit continuations. If you come and the market has already moved in a previous session, it moves in London, I come in New York on a day 3, I'm looking for the trend continuation, perhaps opportunity, if we have not broken through the levels or completed a measured move, which again, I've gone over in detail in the last few videos. So please visit that playlist because everything that you need is in that playlist. Now, there's some confusion about peak formations. I've heard all kinds of variations, and people say it's just a swing high and a swing low. You really need to understand that the high of day and low of day are formed by peak formations made in a session. This is, we're talking about, we come into a new day, those levels are already in place. Let me repeat. The high of day level, when I come to the screen, is yesterday's high of day level. It is made by a peak formation in a session. Yesterday's low of day level is made by a peak formation in a session. Now we'll talk more about breakouts, etc., but understanding that the daily levels on any given day are made by a peak formation. And if they are not made by a peak formation, as a market is just still creeping and going lower, that means that that particular peak formation low is not yet in place, whether it's going higher or lower. These are just variation examples. I'm not talking about setups, day counts, or anything else. I'm talking about The levels themselves, when I come to the screen, they have been made by a peak formation in a session if they are indeed peak formation high of day and low of day levels. So they are not these little swing highs and swing lows all over the chart where people have poo-pooed, don't trade, don't counter trend the peak formation. What that means is this. If we have a peak formation, what that means is that if we have a market that's come down and put our peak formation low in place, peak formation high, and we have a market that perhaps has gone up in Asia, creeping down into the London session, they're trading into the peak formation low for a continuation perhaps back towards the high of the day. Just as an example, what that means is traders might be shorting this into the peak formation, whether this is Asia, London, and New York, or a Monday, a Tuesday, and a Wednesday, a Thursday, a Friday, and a Monday, a Tuesday, a Wednesday, and a Thursday. So when you understand that once we have those peak formations in place, we can have 2 different days. We can have a level that separates 2 days. So we can have a market that continued to move lower on day 2. Once a daily level is broken, when we have a 3-session setup, for example, we could have the US, Asia, London inside, creeping trend into the New York session for a vertical continuation and continuation New York Open as a dump and pump template. Point is peak formation high, peak formation low, consolidation, and it might be a pump and dump on the day itself. So traders will ask, well, how do you know which one it is? It's based on how the template will set up on the day itself. This could be New York. This could be London. And we could be coming, we could come into the next day, US is inside, Asia may make a higher high and dump down into London for a pump. We could have a market that breaks down a bit in Asia and pumps up into London, pumps up into the New York Open for the collapse back down. What type of template is it on the day? How does it set up? Is this a day 1, day 2, day 3? Is this a session 1, session 2, session 3? Is it a pump and dump? Or is it a dump and pump? Which one is it? Because they're not the same. One dumps down for the pump, and the other one pumps up for the dump. 2 different types of daily templates on the day, or session template if it's a 3-session setup. Now, sometimes we can get peak formation high, new day, peak formation low, and we can get an inside day. An inside day. This could be a Monday. It could be a Friday. And we get breakouts on the break of the inside day. Coils back down for a dump and pump from the high of the day. Higher highs. Longs are in the market. We saw this set up on oil today. Peak formation low starts our day count once that daily high is broken. This is day 1. Day 2 can be the inside day. Day 3 blows off in the direction of the breakout. Now, in some cases, we still can get a follow day on the new week, if it's a Monday, Tuesday, and another day that continues that trend. And the inside day is merely a day that we don't. A lot of traders have said to me, do you restart the day count? Monday is day 1. Monday is day 1. Tuesday is day 2, and Wednesday is day 3. Wednesday is the reset. I have people asking, can Friday be a reset? And this day, Wednesday's the reset. Okay. Now, if we get to a Friday and we've had a market that's gone higher on Thursday, we're in a trend trade, and Friday puts in a peak formation low and continues into the end of the week, we may have a new 3-day setup, Friday, Monday, Tuesday. Friday is the closing range of the week. It is not a reset. We can get a market that dumps down and pumps heading into a new week, but we start the day count again for our Monday to Wednesday to Friday template. Within that, as I just explained, we can have 3-day setups that form anywhere. And I repeat, go back through the videos. For anybody who thinks it's complicated, you need to do your homework. Or you can just stick to Free Cash Wednesday and Free Cash Friday, because those are both day 3s. And your challenge then will be to find templates that set up peak formation consolidation for either a trend trade in the long direction or short direction, or a market that sets up for a reversal trade on day 3. Typically, we may see that on a Friday. We saw one today on a Monday on Swiss franc. So just to repeat, the peak formations form our levels. That's why these levels are critical, because we'll either fail, we'll get a 3-day setup that forms from a failed breakout on either side. Any combination of 3-day setups. As we talked, we can get a peak formation breakout of a daily high of a week. And people call this a failed breakout right away. It's not a failed breakout until we break a daily low. Now that's a failed breakout. Otherwise, this market is just inside. And I got people marking off all these levels, calling them all these names and zigs and zags and this and that. Levels. That's where the market works from. All these other little things inside are fugazi. If you are trading on the inside, you need to be in a coiled market that's already in process or about to go parabolic on a day 3. Any combination of peak formation high and peak formation low, 2 days in a row. We can sometimes have an inside day, so we could have a peak formation high, a peak formation low, and an inside day in between, which means we have 3 days now, and we might find that the next day is our trade. They trade into that peak formation low, higher high, dump and pump, coiled short squeeze parabolic in the playbook. A parabolic trade coming out of the low of the week, out of a 3-day setup that can include an inside day. We do not reset the day count or anything else. It's day 1, day 2, day 3. We get a failed breakout, but they creep it back down into the low of the week, which would be the 4th day, but we don't reset our count. It's the 3rd day, because the inside day now is just inside. Peak formation high, peak formation low. 3rd day into the low, they work the low, short squeeze parabolic, and that's a 4-day setup, because we do include the inside day. Inside day triggers breakout traders into the market. We have a lower high. The next day we have a lower high. 3 lower highs. We're heading into the short squeeze parabolic long trade at the low of a 4-day combination setup. Now, typically, when I'm looking for a large move, I will look for that in the 3rd session, for me, US session. Sometimes we'll see huge moves in the London session on British cross pairs or Euro cross pairs, which is why often we might not see those pairs move that well in the US. We might not see a great trade on the pound yen for a few weeks in the US session, but we can see some explosive moves on a 3-day setup in the London session on the pound yen or on the pound Australian. Occasionally we'll see the same thing in the Asian session on Asian cross pairs, pound yen again, maybe Aussie yen. We can see combination of just even the straight US crosses having a parabolic move in the Asian session. I'm just going to randomly go through different charts. We're looking at the euro. These are 15-minute charts. Sometimes the economic calendar will affect how these templates set up, but I want to paint the picture again of a market that has broken a level, broken out. Forget these days. We're not talking about this. We're talking about 2 days in a row where we have peak formations, peak formation high. That market's come back inside. The next day, as soon as it breaks a daily low, that is now confirmed as a peak formation low. This was a Fed day. And then we have a day 3. Day 3, this is a 15-minute chart. Let's put our Universal EMA on there. Heading into our London session, goes parabolic back into the peak formation high. We're not even going to put closing price on any of this. I want to paint the understanding of peak formations, and that forms on our new day. We have a peak formation low of the day. We have a high of the day, which is broken right away because that is not that itself is inside of the peak formation high, peak formation low, consolidation sideways for the parabolic move back towards the real high of the day into the peak formation high. That market pumps up, and at 9:30 New York time, we'll zoom in on that candle right here, 15-minute chart again, we get an engulfment pin hammer back into London session parabolic long traders. We'll just zoom in across. So a reversal on a day 3. We have our parabolic trend trade and a reversal on day 3. We had a similar setup today on the Canadian dollar, a peak formation low of day broken, a peak formation high of day, which confirms this is day 1, a first red day close, a close below the open, and then a lower low on the inside, lower low that pumps up into our previous high of day level before dumping down, and that establishes our range for the day heading into our U.S. window. They pump it up in New York and go into consolidation. That market goes into consolidation into the peak formation high. So they're pumping it up into the high on Monday, day 1, before we get our engulfment and pin hammer at 9:30 New York open. If you want to zoom in on, go to your charts, zoom in. It's the template I'm trying to show you because I receive 100 questions every time I post a 3-day setup, and I need traders to go and do their homework. If you are sitting there scratching your head, you need to understand it's about the levels, breakout levels. I got people telling me that it's 3 pushes out of the opening range and Monday's opening, that's it. And you need to understand what these levels mean and who's trapped and what type of setup are we looking for. They pump it up. Pump, and a pump when? Into the New York open window. Third session on the third day for an easy parabolic 40, 50 pips session trade back into traders that were long in the London and Asian sessions. Pump and dump on Monday, day 1, but it's a 3-day setup. I want to give you some homework to do, even with your U.S. indexes. Now, I've repeatedly said that I look at the U.S. index at 9:30, and I know traders want to trade it in Asia and London, but my thesis is this. It's a U.S. index. It's going to move when the U.S. session opens. And so when that opens and trades to the close of the day, the close of the New York session, that defines my boundaries. Once 9:30 kicks in, let's go and look at our levels. We can just look at the NASDAQ as an example. When 9:30 opens, when 9:30 New York opens, are they going down or are they going up? When we go back, when we're looking at a new day, so we're trading on a new day, what we want to know is, did New York put in a peak formation high or a peak formation low? The close of the day, high of day price is made by the U.S. New York session. Where is the other peak formation? The other one was made at the New York Open. Now, we talk about the 3 levels, closing price, high day, low day, in the other videos. These are the 3 levels that I trade from. But unless you understand the peak formation in the session that you're trading, you're still going to believe that all this other stuff means something. It's Fugazi. Until New York opens, everything else is Fugazi. They pump it up. After breaking out of the high at the New York Open, they take traders higher before dumping down. This is without looking at the news calendar or anything else. Before continuing higher. Remember, we're looking at this the next day, not on the day. So when I go to my new day, where is my peak formation low and my peak formation high? My high of day is already in place. Where's my peak formation low? They traded through my peak formation low or high and went up and made a higher high. This is my low. That's my high at the end of the day. Peak formation low, peak formation high, consolidation. Are they working the high or are they working the low? We're not even talking about day count or anything else. They pin the high, they break it down and break structure on the inside at closing price and pump it up into the high of day, high of week, peak formation high before collapsing down. We go to our new day. Our high of day has been made by a pin high to the high of the week, high of the day, and our low of the day has been made by a W double bottom peak formation low before going back into consolidation. Peak formation high, peak formation low. Are they working the high or working the low? They dump it down into the low of the day. This is prior to heading into the New York Open, remember. This is what we're doing before we get to 9:30. The market breaks out. This is a 15-minute chart. The market breaks out before dumping down right away at the open for a dump and pump setup. Peak formation low. Breaks out, makes a higher high. Some traders are shorting this thing. It's a peak formation high for the continuation in the long direction. So these templates, when we look back, we can see consolidation, continuation, peak formation high, peak formation low, consolidation, parabolic setup. When we come to our New York session, are we working the high or are we working the low? Lower low on the inside, major red news, 10 a.m., whatever. Fed, lower low, pump, engulfment, dump. Now we have volume above closing price. And as I just mentioned, on a day like this, we can often see closing price represent 50% of the range. And guess where all the volume's trapped? Above that level. Just like a first bar trade on major red news, volume trapped on the first level. They may engulf, but we had Fed day and a Thursday. Again, a 4-day template on a Fed week. We break out traders in the market. That market closes out of balance. Where's our high? Where's our low? Peak formation high. Peak formation low. The market keeps going lower, as we talked about in the example. Asia puts in the low of the day. Higher high above closing price. Are they working the high or are they working the low? In the London gap time, short squeeze parabolic that comes out of the peak formation low of the day. We've taken out the low of the current week. We've traded into the breakout of the opening range. I'll just show that real quick. Tuesday's opening range breakout. We'll put a little line on top of that breakout peak formation level. We traded down into that on Thursday. We went higher. Remember, what is New York doing on the open itself? They bring it up higher. We had major red news at 10 a.m. Is it a dump and pump, a peak formation low on the inside? Or is it peak formation high for a dump setup? New York opens. Does it make a low or a high? Parabolic continuation trade. Day 3 opportunity. When we have this type of setup, again, we can measure our current rectangle as a measured move. We can measure a 50% range expansion on a day 3 on a Friday. We have 100% expansion of that range. If we take this up to the high of the day, we can perhaps see a 50% or more extension of that range on a day 3 continuation trade. Point I'm making, though, peak formations are formed. The high and low of the day are formed in the session. New York indexes, the peak formation highs and lows are made in the New York session. Now we can look at all kinds of different session times. We can look at all kinds of combination of different setups. This is the British pound. The same principles apply in terms of the day count, and then an opportunity on a day 3. We can scroll back and look at any combination of 3 days where 2 days of boundaries have been broken. We can just randomly go through this chart, find a peak formation high. This becomes a day 1 right here when this level is broken. So we can scroll back, we can see a peak we got a Monday peak formation low. We have a Tuesday peak formation high. And we get a parabolic trade. Obviously, there might have been major red news on this day at 9 a.m. It breaks out. When this day, our reset day, Wednesday is our new day 1, we have a breakout of a level. We're now in a market that is in day 1 shorts, breakout traders in the market. we can look for a market that breaks a daily low. That keeps going lower. We will move down. Market keeps going lower. Triggers it, but keeps going lower. Traders are saying, well, yeah, but it's day 3 breakouts in the market, but it keeps going lower. Keeps going lower. Keeps going lower. No low of day broken and failing until we see this right here. They're inside. It's already in breakout. We saw this same setup 2 weeks ago on the US indexes. So let's look at this. We have a market that is a peak formation low. Peak formation low. And let's say nothing is relevant to us. Traders missed the trade in London, but on this particular day, this now becomes a day 1. We did at 10 a.m. Day 1, day 2, day 3 continues to auction in the direction of the trend. We've broken that high of day level. What that means is that our peak formation high is not yet in place. We can talk about front side, back side, all this, or we can talk about 3 levels, but our peak formation high has been broken. We have a low of the day level and our current level of the day and a closing price level, which the trade came off of in Asia. Continue to auction higher. This is the US session. I've only highlighted the pink section for the London session, the engulfments right at the New York Open for a parabolic collapse on day 3. Peak formation, a new daily high is broken. That starts our day count. Peak formation low. The market continues to go higher, makes a peak formation high on day 2. It continues to go higher on day 3. Our peak formation high has been broken. Are they working the high or are they working the low? Peak formation high, peak formation high, lower low, consolidation, high bull, major resistance, right out of the playbook on day 3 for the parabolic reversal trade on Free Cash Friday. Let's just follow this. So we have a peak formation that comes back inside on Free Cash Friday. We break the low of the day in London on Monday. This becomes our new day 1 now because, why? Because we had a failed breakout, and this is also a first red day on Monday, and you'll notice again, we have our levels. When London opens, do they pump it up or dump it down? Peak formation high inside of the failed breakout into the level from day 2, Thursday. It's a little head and shoulders pattern for the collapse on Tuesday, targeting potentially a measured move range expansion of our high-low, peak formation high, peak formation low on our Monday, which now also becomes a day 2 because of the failed breakout on Monday. Monday, Tuesday, let's follow this across. We have a low of the day broken. Continuing down, we have day 1 shorts in the market. Day 2 shorts in the market. Day 3 shorts in the market. Now let's look at this. On Monday, peak formation high. On Wednesday, are they working the high or are they working the low? Day 1, day 2, day 3 in a Monday to Wednesday template. Peak formation high, peak formation low. Consolidation down low for a parabolic trade in the London session. So, understand what these levels mean. Understand where your peak formations are. Was there a peak formation in place on day 2 on Tuesday? Underneath the closing price, we're making lower lows. They're still going lower. We make a low a day. They go down even lower again on Wednesday. That means the low of the day is not in place yet. Are they working the high or are they working the low? Day 1, day 2, day 3, parabolic reversal trade. Now let's follow this across into Friday, which was payrolls, by the way. Day 1, peak formation low. We have a peak formation high. Our London session auctions down into and makes a low, heading into our U.S. window. That market reverses at closing price from the peak formation low of London and continues to auction higher. Day 1. Day 2, Free Cash Friday, non-farm payrolls. When payrolls goes off, Are they working the low or are they working the high? Peak formation high, higher high on Free Cash Friday. We've broken the level, which automatically starts our new day count. We have a failed breakout on Wednesday. We've broken that level on our Thursday. We've broken it again on Friday. We have day 2 longs in the market, and then day 3 on Free Cash Friday, higher high for the dump and pump on non-farm payrolls. 9:30. Let's zoom in on this. 15 minutes into the New York Open. What do we have? Pin hammer for the explosive reversal dump and pump setup on Free Cash Friday. Market didn't blow off in the direction of the trend. It dumped down, reversed, hit stops. Low of the day from day 2 longs. Engulfment pin hammer for the explosive reversal. Study your peak formations. Understand what these daily levels mean. I really kid you not. Get away from all the gobbledygook inside and zigzags and marking off every little bar and 1-minute charts, and understand what templates look like. Peak formation, just glancing, peak formation in the London session, goes higher on the next day, Monday, Tuesday, Wednesday keeps going higher. Peak formation high. Are they working the high on Thursday? Peak formation high in the London session. Lower low. That is the setup for the pump and dump in the U.S. session. Tuesday, Wednesday, Thursday. And then a continuation trade, low-hanging fruit on Free Cash Friday. Study the peak formations. Understand what these levels mean. If you master your craft in the session that you're trading, there's money laying on the floor, traders. Keep it simple. Understand when you get a combination of 2 days of failed breakouts. Peak formation high, peak formation low, consolidation. Do not try to front run something. Do not try to guess. Do not try to catch a falling knife. Do not jump in front of a rocket ship. I am not trying to catch moves. Scalp the high or scalp the low or catch pips. I'm looking for scalable opportunities on a 3-day setup, a 3-day template. Study them. They're there every day. If you have a basket of instruments large enough, if not, sit on your hands and wait, because there will be opportunities on Wednesday. And if it doesn't happen on a Wednesday, it's probably setting up for Thursday or Friday, and 1 or 2 of these a week. I repeat, listen closely. 1 or 2 of these a week is enough if you understand that they're scalable in size. So we're not just trying to risk 1% on every trade. I'm not. If you understand what these setups can offer you, you will start hunting them out diligently and be patient. Sit on your hands and wait. There's money laying on the floor. Like Jim Rogers says, all you have to do is walk over, bend down, and pick it up. Keep it simple, traders. Master your craft. Study these peak formations. Understand what these blue lines represent. High and low of the day in the session that you're trading. Peak formations. If it's still going higher, that peak formation high may not be in place yet. If it's reversing, or they put a new peak formation in place, we need to trade back into that. Peak formation high, peak formation low, consolidation, parabolic trend trade. Have a great day, traders, and may the markets go with you.